Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the low time frame bearish scenario where we are looking for a 5-wave impulsive move to the downside, where we're still looking for at least one more low to also take this low over here, because it is nice if all the charts align, and on some charts this low has been taken and on some charts this low has not been taken, and the probabilities are high for all the charts to align, so all of the charts at least taking this low at 24,750. Now in this scenario we are then working on wave 3 and a potential 1, 2, 3 sideways 4, 5, either for already in or another move up and then down. That's something I'll discuss in the micro scenario. But what I think is interesting is the chart that Lucantonello shared in Discord. He shared this chart over here, which is the Bitstamp chart, and he had the following count. Now you can see he zoomed in to the range where we are at the moment, but just looking at the count he has, we can read what he does. So on Bitstamp, there's not a big wick to the downside as I have over here on my Coinbase chart. And he then inside the bigger wave 3, the blue wave 3, counts this as a 3, sideways 4, and then a wave 5 over here at the end. So basically, what he has done is putting this wave 3 over here on the left. He's then looking for now a new wave 4 in the making, for then eventually a wave 5, and his count inside this wave 3 is then a 1 in a diagonal, zigzag in a 2, big 3, wave 4, and this over here being the low of his wave 5, which I think is definitely an interesting count on that Bitstamp chart, and one I at least want to share, because it could work nicely with the macro bullish bearish count, which I'll go in more detail in a second, where we're still looking for a move towards the upside for then this wave potential, wave 4 over here. But if we first zoom out once again, we are at least looking for another low on this time frame. If we look at the bullish scenario, it could be interesting as well, if you're at least bullish, where we're then looking for an ABC, where if we follow the count of Lucantonello, and this is then the low of a 5-wave structure to the downside, it could work with a wave C on top of the 1.618, which is a rare target for a wave C. It's a common target for a wave 3, so therefore the probabilities are a bit lower for this particular scenario, and therefore lower for price to move to the upside, but at least having the low of a potential wave 5 over here instead of here work better for this scenario, because if you put wave C over here, then you want to see an impulsive structure on the micro bullish scenario, but zooming in to the micro bullish scenario over here, it doesn't look nice at all. There's many reasons why this scenario has very low probabilities for bullish continuation. If you put the low of wave C over here, it would then fit better if in a wave C, this is a wave 4 and then another wave 5 to the downside, where C is going to be made somewhere below, but then it fits with the micro bearish scenario, which I've just shown you as well, like having one more low, take the low at 24,750 as well. So if we would put wave C over here, then we could potentially count this as a wave 1, wave 2, and you then really want to see a big wave 3 to the upside, volume increasing with big candles to the upside. But then again, it currently does have a lower probability. If you then zoom in to the micro bearish scenarios, then this is the first one that I like to show you, where we then have a finished sideways structure. So in this scenario, we are not looking for wave 3 to end over here. We are still looking for a wave 4 and now continuation to the downside in a wave 5, where wave 4 is a nice WXY, wave Y over here hitting the target for wave C. So inside wave Y, we have a 3-wave structure in an ABC. Most common target for C has been hit perfectly. We had some more bearish CVD divergences here, price moving to the downside. There is, however, for me still one problem, and that is the beginning of this move over here to the downside, the beginning of this structure to the downside. Because if we are looking for the bearish scenario, where we are looking for impulsive structures to the downside, and this is the high, and we now look to downside, you want to see impulsive structures, meaning 5-wave structures to the downside. And I know I have shown this in different videos already, but this structure over here, I have difficulty to count this as a 5-wave structure. It looks like, you know, a 3-wave structure. Can this be a 1, 2, 1, 2? Well, that looks ridiculous with the length of this wave 2 over here. And it's then also an expanding diagonal double 1, 2, which is very rare as well, because you want to see contracting diagonals double 1, 2s preferably. So just because of this structure over here, I'm not completely comfortable saying that the high of this range is in and we are going to be looking for much lower prices. However, looking at the reaction over here, we do at the moment have some bearish CVD. So on the micro, I'm actually quite neutral, which we'll talk about in the probability section, because yeah, we did make a high after a 3-wave structure. We had some bearish CVD. This move down over here looks like a 5-waver. It's just the beginning over here, which does not look like an impulse at all. If we look at the other scenario, which might support the scenario of Lucantonello, where this is the low of wave C, but also this scenario in a bigger WXY, but if wave C ends over here, you're still going to be looking for a 3-wave structure, so it's the same result. We are then still looking for a move to the upside in this scenario. So we have a wave A to the upside, potentially a 5-wave structure with a very short wave 4 over here, or in Lucantonello's scenario, this can be a wave W and then an ABCW, then you have an X, and then you'd be looking for a wave Y to the upside. But in this scenario, we're looking for upside. The double bottom over here has been taken at 25.8K. As you can see, a nice swing failure pattern move also inside the target area, as you can see, for a potential 3-wave structure here. However, counting this now as a 3-wave structure also becomes complex, because we now have a move like this. So a 3-wave like this and then another move like this could be possible, right? Then a 3-3, but then you still expect another 3 to the downside, really, unless this structure becomes complex in a double or triple zigzag. But at the moment, as you can see, I haven't counted this in detail because it just, based on what we see, doesn't make too much sense, especially with the beginning over here, which looks like a 3-wave structure. This then looks like a 5-wave structure. It doesn't really match up. So preferably, I'm neutral. I know the higher time frame counts that I'm looking for, and I look locally for the reactions to give me better probabilities of looking for upside or looking for downside. But at least the low has been taken. That was a swing failure pattern type move over here. Low taken, candle closing above this low over here, which was nice for at least a bit of a push towards the upside. But if we then go to the CVD divergences that we have locally, and actually let me put these on the chart as well. We first had bullish CVD divergences. These played out as price took this high over here. But more locally here, we actually have bearish CVD divergences. So zooming in to the 3-minute, you can see price move to the upside, and then here price move down, and then a retracement. Lower high on price, higher high on the yellow CVD. That's a bearish CVD divergence, which played out as this low was taken. Then price moves back towards the upside again, creating bearish CVD divergences. However, it has to be said that this is a second divergence with this high, meaning there's lower probabilities of it playing out or pushing price all the way to the downside. So that is something to remember, but it is a bearish CVD divergence nonetheless, and lower probabilities does not mean it's impossible to play out, right? So this is definitely something to at least keep in mind. Now, if we look more locally, and I actually use a fib, take it from the high over here to the low that we have, and you can see price kind of rejected between the 886 and the 786, and that is important because if this is only a bounce for then continuation to the downside in an impulsive structure where you're then looking for this to be a wave 1 of some sort, a sideways 2, and now a continuation in a 3, then a common target for a wave 2 is the 0.786, but a rare target is the 886. And preferably for a wave 2, you don't see price closing above the 786. So the fact that price over here closed above the 786 might increase the probabilities of price still finding way to the upside. And I do know, based on the updates that I've been sharing in different groups, that over here, actually if we go to the 1 minute, we do have on the lower time frame a bit of a point of control all the way down here, which can be interesting if price moves down at 25.8K, which also is at the 786 of the very low time frame. This is 1 minute stuff, right? On a very low time frame, the 786 with this little point of control. Of course, we have the golden pocket also with the value area high over here. Very, very low time frame stuff, but it is at least interesting to have a look at what is happening, because this is what I mean with looking at the reaction. It's the divergences locally, and as it stands, we are creating bearish CVD divergences, where also the second one almost played out if this low over here gets taken. Now, if we then finally look at the probabilities of the different scenarios, then on the higher time frame, we are looking for price to move towards the downside still. So on the low time frame, we are still looking for at least one more low to be made, both in the scenario of Lucantonello, where he is looking for a 3, potentially a 3 wave 4, and then a wave 5 to the downside, but also in the scenario I shared earlier, where maybe 3 is not yet in, we are also still looking for a move to the downside. So still the trend, trade the trend until it breaks, or whatever the quote is, right? Follow the trend to the downside. Currently, we still expect another low to be made. However, very, very locally, on the micro at the moment, I feel neutral based on what we see. We did wick the low over here, which is nice, which was a nice support area as well. Locally, we have some bearish CVD divergences, but they are second CVD divergences with this high. Price retraced very high to almost 886. So I would say probabilities might be higher to look for upside, and then we wait and see what happens. But I do at least like to say I feel quite neutral locally. Also, because this over here is for me still a 3-wave structure really, which doesn't really support a big move down, but the volume that we had over here and seeing some bearish CVD also countered that with maybe more downside. So yeah, let's wait and see. Preferably, I mean, low time frame bearish scenario, and on the micro I feel neutral, but I still aim actually for a little bit more upside, I suppose. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.